Friday, September 30th, the last day of the week, the last day of the month, and we are starting October next Monday. Stan Ehrlich, Market Analysis. We've got the S&P Spider ETF chart on the screen. This is what I usually start with. It's been 6 days now since the market gapped down and challenged the previous lows in June. We have made slight new lows lower than the lows of June. But so far there has been no substantial, no significant downside follow-through. And in fact, on Wednesday of this week, we rallied back up to make new highs for the previous 3 days and a new high close, and almost closed the gap completely. That was between a week ago and the next day, Thursday and Friday last week. So there's still a gap to close. Gaps are usually closed, not always completely, so maybe that was enough. I don't know yet. We are oversold. This means that the market is highly likely to start a significant rally for several days or even weeks, if not possibly longer, very soon. Hasn't started yet. In fact, we are currently down about 0.5 point. It is about 10:15 California time, so I waited a little longer today to try to see what was developing in price action. I need to have a rally. I need to have a strong rally. I want this market to close higher than all of the highs of the last 6 days, including today. That would close the gap. That would be construed as a short-term bullish breakout. That would tend to confirm the oversold conditions starting a rally. And we would have the October lows maybe a couple of days early this year. And there are a variety of other reasons to believe that this market could start to rally. Right now, the 1-minute chart doesn't show any rally. Yeah, maybe there's a bottom formation developing here of some sort, but we got to start to, guess what? Rally! And it not. Basically the same kind of commentary, reasons, formations, etc., apply to the DIA, the Dow Jones Futures ETF, sorry. Also applies to the QQQ, but the QQQ did have a bullish engulfing ER buy signal on Tuesday, which failed, but not too badly so far, but it failed. Now we also need, in all 3 cases there, a good strong rally. Hey, look at the 2000, the Russell 2000. Today we've managed to get higher than yesterday's high and managed to have the highest, second highest high for the last 6 days. It's not staying there at the moment, so we're slipping back. But all the other oversold conditions and gaps to close, which in a couple of cases have been closed, apply, blah, blah. So it ain't happening yet. You got to see it start to happen to start to take some action on it. Otherwise, you're a little premature. Maybe that means your risk is a little less if you have some disciplines about where you're going to put your protective sell stop or stop loss. I hate that phrase. Let's look at some corroborating evidence here. The bond futures and the 10-year notes. I got a great buy signal on Wednesday. The bond futures on the left side, green bullish engulfing, daily data, came down, got filled on the bid, came back up. We're again today a little bit higher than yesterday's close, 6:30 seconds, not much, but it's not lower. The 10-year notes are almost identical commentary. We've had some great trades recently in the 10 years. We are involved in the potential start of a rally because it's only 3 days old. Wednesday was the buy signal, came down, got filled on a bid, starting to come back up again, not very aggressively yet. I like what I see with corroborating evidence. The indexes themselves just don't seem to want to kick in and trust that rates, at least very short term, might be slipping down somewhat. This also could be a lot longer term. I just can't tell. It's too soon. I want to mention the October low, as I have for weeks now. Next week starts the month of the year when the stock markets love to hit a bottom. Most people tend to say that September is the worst month of the year, and I would agree if you're a long-term investor and you're not interested in liquidating and getting back in again and so on. Those skills apply to somebody else, not you. You're busy doing something else. But I like to say that September is a great month if you know about this October low, which has a historical likelihood of being in the high 80 percentile, low 90 percentile, around 90, for the last 30 plus years. So if you are nimble, you go short in August or September and down into October, and obviously look for a buy signal, a reason to reverse your position in October, and very often you have a month or two or even more up after starting in October. I think this is a great setup for the October lows. It looks like it's falling right into our laps as far as the seasonal tendency is concerned. Interest rates may be shifting, oversold conditions, etc., all tend to apply around bottoms. Let's look at some futures contract real quick. These are current trades or developing trades. Upper left-hand corner, crude oil got oversold a few days ago and bounced back up again somewhat, but the darn trend hasn't changed. Well, that's not really bad news. The trend hasn't changed. It's bearish now. We've seen new lows for quite a while, and it looks like the trend is going to continue down. No buy signals, no reason to do anything other than stay short. Remember, we had a sell signal smack on top of the market June 14th. Heating oil, again, smack on top of the market June 17th. Bearish ER signal, a 100% automated trading system I've developed, working very good, making some money. We had a buy signal that did not work a few days ago in the heating oil. The trend really hasn't changed. We're trying to, I think very soon, break down into new low ground below, say, 3.0. And that should perpetuate the bear trend and cause a fairly sharp break real quick. Let's go here to high-grade copper, HG, futures contract. Gave me a buy signal 2 days ago. It's going up. Got no problems. Looking great. That's what this strategy, the ER signal, is built for. End of story. Next, the YM, same thing. This is the Dow Futures. Remember, it's a little different because it's open many hours more than the regular DIA. So the YM did provide a bullish engulfing and a buy signal. Not doing real well at the moment like I started out with the other charts this morning. But it hasn't violated any rules. It's just coming close. What about the gold market? Hey, Wednesday, buy signal. Looking good. Didn't do much except we bought almost the low of the day yesterday and closed with a profit. Today it's up a little bit more, nothing special. I think the rally could at least go up to where I've drawn a line here. 1709 or maybe a bit more. That is a fairly small rally from where we are now. I like the way this looks. I'm friendly to the gold market at the moment. Not super bullish or anything, but I think we're going to have another several days or a week or more of strength. Going over to the right, well, that's bonds again. It's doing fine, not particularly aggressively. And lastly, platinum gave me a new short sale signal on September 21st. dropped very sharply within 2 days, made some very good money, and now has bounced a little bit. Basically still looking for lower levels. Don't have a change of opinion. Over time, this has had lower highs and slightly lower lows, one of the basic definitions of a bear trend. So, last subject, Forex. Hey people, when you get a bearish engulfing and a sell signal in the dollar index, you would expect to get the exact opposite in other currencies against the dollar. Not always, at least for my trading system, the ER signal. But this time we have. Again, Wednesday has been a relatively magic day for a variety of markets. We have a bullish engulfing in the euro dollar after being the lowest lows for 20 years. So it started to rally some, not particularly aggressively, no longer term trend change. I do think there's a good possibility or probability that it's going to go below 95 in the weeks and months to come. But for now, a little strength, maybe up to 110. I might not even rule out something as strong as 105. The dollar index, the DX, has a bearish engulfing at the same time that the euro has a bullish. It's coming down. Good sell signal. Maybe you like to trade the euro Forex. Maybe you like to trade the DX. Whatever. They correlate. They're looking good. Got no problems with the combination there. I'm going to leave you with this comment. I will not be publishing next week. I'll take a little break for 1 week. So we will get together again after next week for more of the market analysis with Stan Ehrlich. Thank you very much. Signing off. Have a great trading day and good luck next week.